Hello, in this presentation we will enter the transaction related to receive payment into our bookkeeping Excel problem, keeping in mind how the same input can be put into software such as QuickBooks. We will start off with looking at how the information could be put into QuickBooks briefly, and then we will go through the process of recording the same information in. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below our Excel worksheet. What we are saying here is we have a receipt of payment from a customer, and we're going to imagine then that we have already issued the invoice in our process. This is the home page of QuickBooks, and now we're going to receive payment in the mail. In other words, we're imagining that we shipped out the guitar in our case, and we sent an invoice with it, and now we're getting payment on that invoice. When we look at that data input screen, it would look something like this. And once again, all we need to do is just enter the data, and accounting software will typically make this process very easy. Meaning, if, for example, we received a check in the mail from Anderson Guitars here, and that being the customer, we would just have to fill out Anderson Guitar, and then the system would say, hey, we have an invoice that happens to be for $5,000. Is this payment related to that invoice? And we would just say, yes, it is in this case, by checking that off, and then put the date of the invoice and any more information, including the check number. And that's all we really need to do in order for the accounting system then to process this. When it does process it, then we'll see what happens is that the customer payment typically through the software will just mean that we are decreasing the accounts receivable. We're getting payment for something that happened in the past, and then the other side of the transaction typically in this software will go to an account called undeposited funds. And that may be new to people that were looking in accounting theory. We don't usually talk about debiting or crediting an undeposited funds account. And we'll talk a little bit on why we do that as we process this through our software in terms of Excel. We'll put the same information into Excel and work through this journal entry. Moving over to the Excel worksheet, we're going to enter this same information, receiving a payment from a customer. Typically, it would be worded in a textbook something like received payment on account or something like that, indicating that we are getting cash. And the reason for the receipt of that cash is not that we got the revenue at this point in time, but we are paying down the accounts receivable. So we're reducing the accounts receivable, and we're going to record the cash receipt. The new thing that we're going to do, and we're going to mimic what would happen in the accounting software, is that we're not going to just debit cash as we normally would if we received payment on account for a normal transaction. We're going to put this other added account in place, that being undeposited funds. In essence, this is still a cash account, but what it's going to do is just hold on to those checks or those payments that we have not yet put into the checking account. So the checking account here is more detailed than just cash. It means that this is our checking account, what's actually in the checking account. And this is going to be another cash account that will be the stuff that we're holding on to, that we plan on putting into the checking account. Why would we need this? We want to be able to reconcile the bank accounts, and that's going to be the main thing. So at the end of each day, theoretically, we would collect all the receipts for that day and then go to the bank at the end of the day and deposit them. We're going to deposit them all with one deposit, even if we have multiple checks. And therefore, when we look at the bank statement, it will be deposited in terms of groupings of checks. And we want to be able to group our information in QuickBooks the same way, so that when we do the bank reconciliations, we will be able to group them out and check off the transactions as easily as possible. Therefore, we are going to do this process. We're going to put it into undeposited funds, and then when we go to the bank and deposit them, we will move them from undeposited funds to the checking account in accordance with the grouping that we have deposited in. So we're going to scroll down here. We're going to put a new transaction. It's going to be on January 12th, I should say. January 12th in F19, and then we're going to scroll back up and we're going to say, is cash affected? It is, but it's really going into this undeposited fund rather than the checking account. Like a cash account though, we're going to do the same thing to it. We're going to increase it. It's a debit balance account. We will increase it by doing the same thing to it, another debit. Right-clicking and copy. We will put that on top in cell G19, right-click and paste 1, 2, 3. The amount then is going to be for the 5,000. So we'll enter the 5,000 in the debit section. Then we're going to have a credit for something of 5,000. And the reason we got this money, we got a check in the mail, is not because we earned it at this point in time, but because we earned it at some prior point in time and now are receiving payment for it. That's the account of accounts receivable. So here's the receivable representing people owing us money. It's now going to go down. We do the opposite thing to something when we want it to go down. This being a debit, the opposite then is that credit. So we're going to copy the accounts receivable account. Scroll down, we're going to put that in cell G20, right click and paste 1, 2, 3. We're then going to go to the Home tab, Alignment Group, and Indent, and there is our journal entry. We're going to go ahead and post this now. Here's the undeposited fund in the journal entry. Here's the undeposited fund in the trial balance. We're going to find that same undeposited fund in the general ledger, which will be in the same order. Scrolling over. Well, let's do one more thing. We're going to do one more. I'm going to scrolling back over, and we'll freeze the panes to make this process a bit easier by clicking on cell AJ1, then going up top and going to the View tab. We want to go to the Windows group and freeze panes. We're then going to just freeze the panes at the top, and hopefully that will make this process a bit more simplified. Back down to recording this journal entry. We're going to record that journal entry. We are looking for undeposited funds, which is an asset account. There it is. It's in cell AU22. That's where we want to record this information in AU22. We will select equals and then point to that 5,000 in H19 and select enter. It then increases to that 5,000. If we scroll back to the trial balance, we then see the 5,000 undeposited funds here. We're then going to record the receivable side. So here's the accounts receivable that we want to record. It's the second account on the trial balance and therefore will be the second account on the general ledger as well. So it's right there. We're going to scroll down just a bit. We're in AR11, cell AR11. We will say equals and then point to the I-20 and enter. So that amount has gone down from 21,330 down by 5,000 because we did the opposite thing to it, a credit to 16,330. That same 16,330 would then be found over here in in accounts receivable. Now we've also done something to the receivable, and remember that means that people owe us money. And we also track that over here in the general ledger as we do with all accounts by when the transactions happened. But we also want to know who owes us that money. This will be done within this system by going through the subsidiary ledger. This is something that could be automated by an accounting system if we are able to put in the customers. When we are doing a system in Excel or by hand, we need to put this information into the subsidiary ledger to know who owes us money. We are going to the right here. I'm just clicking over to the right, all the way to the right till we get to the subsidiary ledger. So here is our subsidiary ledger. The person who paid us is Anderson. So we're going to be right here. And really, I'm just going to record this same credit to the receivables right there. So we're going to say this equals that credit, and that's going to bring this balance down from 5,431 down by 5,000 to 431. So there's the 431 owed by Anderson. If we were to add up all receivables from all customers who currently owe us money, we get 16,330, and that should be the amount on the general ledger. Let's double check that. I'm scrolling back over to the general ledger. Scrolling all the way back over to the green accounts on the general ledger. And there we see 16,330. Same data, just a different order. Rather than just being by date, now in order by first. the customer, then by date. Then we see the same amount, $16,330, in the accounts receivable account for the trial balance as well. We can then see that this trial balance is being created from the general ledger and can be used then to create the financial statements, something that can be done in essence in an automated type process when we create the financial statement. So I'm going to scroll back over here all the way over to the financials, and here are the financial statements. Now note the undeposited funds are broken out here. Probably should be included in the cash account rather than a separate account for undeposited funds. But just to show that second account, it's right there. At the end of the day, we're going to include that in cash because the undeposited funds will go away as we deposit them at the end of the day. And in any case, these are the amounts there. And we can automate this whole process, and we can see how this automated process works. As we go, we will create the financial statements at a later point. We can see that we are in balance here in terms of the balance sheet. And the income statement, no impact from this transaction. We had revenue of $790 from prior transactions. Cost of goods sold, $632, giving us the net gross profit, which is also net income because we have no other expenses. And the statement of owner's equity remains much the same as well. We got the beginning balance, the deposit from the owners, the revenue here, net income I should say. That's the net increase, and here's our ending balance, which matches the ending balance here. This is all just being generated from the trial balance, and is something that once the trial balance is made, once the trial balance is in balance, we can just automatically create this stuff. But we do need to be able to know what the trial balance is doing, so that if there's a problem, we can go back and take a look at what that problem is.